Hey, future policymakers. Ready for another deep dive? Today we're tackling a pretty big development, straight from the headlines. The RBI's recent repo rate cut.
Hmm.
Yeah, this is one of those moves that can really shake things up in the economy.
Definitely.
And we all know this is almost guaranteed to be a hot topic in your UPSC prelims
Yep.
for a minute.
Absolutely. This isn't just another event in the financial news cycle. This is a policy shift. And I think it has major implications for where India's growth is headed.
Exactly. And that's where we're going to, break this down UPSC style.
Right?
Like, what's the why behind this decision?
Yeah.
What factors did the RBI consider? It's like your daily dose of Maine's current affairs prep.
That's a good way to put it.
Yeah, and maybe a little bit of little prelims flavor thrown in too, right?
Yeah. I mean, look, let's be real.
Yeah.
Just knowing that the repo rate changed, that's not going to cut it for those UPSC questions. You need to show you understand the bigger picture, right? Like all the forces at play.
Okay, so let's get into it. Now, I know all you UPSC aspirants out there, you guys, you eat economic jargon for breakfast.
Right.
But still, let's make sure we're all starting on the same page.
Absolutely.
What exactly, I guess, this repo rate everyone's talking about, and why should we care?
Well, you can think about it this way. Think of the repo rate as the interest rate
Okay.
that the RBI charges when commercial banks, they need to borrow some money.
Okay.
And the RBI is acting kind of like a lender here.
Oh, I see. So, like, it's a way for the RBI to control, the money supply in the economy.
Exactly. And that has ripple effects on interest rates all over.
So it's not just some number in a textbook.
Right.
This repo rate change could actually affect things like how much we pay for loans for our houses.
You got when the RBI cuts the repo rate, like in this case,
Yeah.
it basically becomes cheaper for banks to borrow money from the RBI.
Okay.
And when that happens, they usually pass on those savings, right?
Wow.
So they lower the interest rates on all sorts of loans. Think home loans, car loans, even loans for businesses to invest and grow.
Ah, I see. So it's kind of like a chain reaction. It
Yeah.
starts with this RBI move, and then it can impact, borrowing costs, spending, maybe even economic growth itself.
That's exactly right. And this is where it ties directly back to your UPSC prep.
Oh, yeah.
Because think about it, the RBI is using this repo rate to try to balance two super important things.
What are those?
One, they want to stimulate economic growth,
In a
right?
sense.
But two, they also have to keep inflation under control.
And we know those are like the bread and butter of UPSC economics questions.
Oh, for sure. Those come up all the time.
All right. So let's dive into the details of this specific rate cut.
Okay.
Why now? Why did the RBI make this move at this particular moment? The Indian Express article pointed out a few key factors.
Yeah, the timing of this decision is definitely key. And I
Okay.
think one of the biggest factors here, one we have to consider, is the recent union budget.
Right.
Remember, it had a big focus on boosting growth through measures like those personal income tax cuts.
Oh, so the government's trying to put more money directly into people's pockets,
That's the idea.
hoping they'll go out and spend it and boost demand.
Exactly. And this is where the RBI's repo rate cut kind of works hand in hand
Oh, okay.
with that fiscal policy. They're saying, okay, we're going to make borrowing cheaper. We're going to encourage even more investment from businesses and hopefully even more spending from consumers.
Got it. A coordinated effort to boost the economy.
Right. The tag team.
But the article also mentioned declining inflation.
Right.
How does that fit in here?
Well, that's a crucial piece of the puzzle.
Yeah.
The latest CPI figures, they show that inflation is easing up.
Yeah.
And that gives the RBI a little bit of breathing room. They can cut rates without worrying too much about, prices suddenly skyrocketing.
Makes sense.
And this is especially important because remember,
Yeah.
the RBI's mandate, their main job is to maintain price stability.
Speaking of the RBI's mandate, the article brought up some pretty interesting historical stuff, right? Like, didn't they mention the Chakravarty Committee
Oh, yeah.
and the Urjit Patel Committee?
Yeah, and that kind of historical context, that's gold for a good man's answer.
Oh, absolutely.
Because it shows how this whole idea of inflation targeting has evolved in India over time.
So tell me more about that.
Well, think about it. Back in the 80s,
Okay.
that's when the Chakravarty Committee, they recommended this target of 4% average annual inflation.
Okay.
And then fast forward to 2014,
Yeah.
the Urjit Patel Committee, they formalized that target, which led to the framework we have today, 4% with a little wiggle room, plus or minus 2%.
So the RBI has been focused on keeping inflation under control for a long time.
Oh, yeah, it's not a new thing.
And that's a key part of their mandate.
Exactly. They're constantly walking this tightrope,
Mm.
trying to balance how do we encourage growth
Yeah.
while also making sure that inflation doesn't get out of hand.
Yeah, that makes sense. And this latest rate cut kind of shows how they're doing that balancing act.
Definitely.
Okay, so we've talked about the budget and inflation, but the article also mentioned something about the RBI wanting to improve liquidity in the banking system.
Right.
What does that actually mean? And how does it connect to this repo rate cut?
So liquidity, it basically refers to how much money is actually available in the banking system, like ready to be lent out.
Got it.
And the RBI has been taking steps to, to inject more liquidity to make sure that the banks have enough funds on hand to actually lend out.
Oh, so they're doing two things.
Yeah.
They're making it cheaper to borrow with the repo rate cut, and they're making sure there's enough money out there to actually borrow in the first place.
Right. It's kind of a 1-2 punch.
But how does all of this relate to what's going on in the global economy? The article mentioned trade wars
Right.
and how those might impact India. So,
Yeah, we can't ignore what's happening globally.
no, definitely not.
All these trade tensions, right? Especially those U.S. tariffs. They've created a lot of uncertainty in the global economy,
Right.
and that can have an impact on the Indian rupee.
Oh, how so?
Well, it can potentially lead to what we call imported inflation.
Okay. So is the RBI trying to create a buffer against these global shocks by cutting the repo rate?
You got it. They're trying to be proactive, trying to protect the Indian economy from any negative fallout from these global events.
That's a theme we see a lot in UPSC questions, right?
All the time.
How the domestic and global economies are all linked together.
Absolutely. It's all connected.
All right, so we've kind of unpacked the why behind this whole repo rate cut thing.
Yeah.
But now let's shift gears a bit.
Okay.
But what about the implications? What could happen next? This is where things get really interesting, especially for all you UPSC folks out there.
Definitely.
Because understanding the impact of these big economic decisions,
Right?
that's key for writing really good Bane's answers, wouldn't you say?
Oh, absolutely. Every policy move has its own, set of potential benefits and risks, and this repo rate cut is no different.
It's like a case study in what? Trade-offs.
Exactly. Trade-offs and also unintended consequences, things you don't necessarily see right away.
The UPSC examiners, they love to test you on that kind of stuff, don't they?
Oh, yeah. They love that.
Okay, so let's start with the good stuff.
Okay.
The potential positives,
Yeah.
right? The Indian Express article seemed pretty optimistic about the impact on growth.
Right.
So how exactly can this rate cut actually stimulate economic growth?
Well, think about it. When borrowing costs are lower,
Yeah.
it's like a green light for businesses, right? It's easier for them to get access to credit.
Oh, okay.
And when they have that access, they can expand their operations, invest in new equipment, maybe hire more employees.
Oh, I see.
All that leads to, more production, and ultimately that contributes to economic growth.
It's like a ripple effect.
It is, yeah. One thing leads to another.
And hopefully the whole economy kind of gets lifted.
Exactly. And it's not just businesses either, right?
Oh, true.
Think about consumers. Lower interest rates, that means it's easier to borrow money for those big purchases, like a house or a car.
Right.
When your EMIs are lower, you have more money left over each month.
Okay, more disposable income.
Exactly. And then people go out and spend that extra money. That boosts demand even more.
Sounds like a win-win. But I'm guessing it can't be all good news, right?
Well, yeah, there are always potential risks.
What are some of those? Didn't the article mention inflation as a concern?
Yeah, for sure. Inflation is a big one. The RBI has to be really careful about that.
Okay.
Stimulating demand is good, but if it happens too fast or if it gets out of control, you can end up with prices going way up.
So the balancing act, right?
Always a balancing act.
They want to help the economy grow,
Yeah.
but they don't want to cause prices to shoot up so high that people can't afford anything.
Right, exactly.
This reminds me of those classic UPSC questions like, examine the challenges faced by the RBI in controlling inflation
Right.
while also promoting economic growth.
Yeah, classic UPSC question.
It's a tough one because it really gets at those complexities of monetary policy.
Oh, for sure. And to answer a question like that well,
Yeah.
you need to show you understand the RBI's tools, the trade-offs they have to make,
Yeah.
and how those decisions can impact different parts of the economy.
Speaking of different parts of the economy,
Yeah.
I mean, wouldn't the impact of this rate cut be different for, a real estate developer in Mumbai compared to, say, a farmer in rural Maharashtra?
That's a great point, and it's something that comes up a lot. You know, any policy decision, whether it's a rate cut or something else,
Yeah.
it's never going to have the exact same impact on everybody.
Right. Makes
For
sense.
different sectors, industries, income groups,
Yeah.
they're all going to experience the effects a little differently.
So this is where those analytical skills come in, right?
Yes, especially for the mains exam.
Yeah.
You have to be able to go beyond the general impact and really look at how specific groups might be affected.
So, for example, lower interest rates.
Yeah.
They might encourage a lot of real estate investment in cities like Mumbai.
Right. Yeah.
But how does that play out in rural areas?
Mm-hmm.
Do farmers necessarily benefit from cheaper loans? Or are there other factors at play?
Those are the kind of nuanced questions that UPSC examiners love.
They love to throw those curveballs.
Oh, yeah.
Keep you on your toes.
Absolutely.
Okay, so we've got the potential impact on different sectors, but what about the financial markets? The article mentioned that as another potential risk.
Yeah, that's another big one.
What do they say?
Well, when interest rates on things like fixed deposits go down,
Yeah.
some investors, they might start looking for other places to put their money.
Oh.
Places where they can get a higher return. So they might shift to riskier assets like stocks or even real estate.
So they're chasing those higher returns.
Right, but that also means they're taking on more risk.
Right, which could lead to losses.
Exactly, and that's how you can start to see some financial instability.
Another topic the UPSC loves.
Oh, for sure.
Okay, so we've got domestic investors, but what about foreign investors?
Yeah, they're a big part of the picture, too.
How do they fit into all this?
Well, if the returns on Indian assets start to look less appealing
Okay.
compared to other countries, you could see some capital outflow.
Which basically means...
We'll be leaving India.
Right, and that could put downward pressure on the rupee, right?
Exactly.
And a weaker rupee, doesn't that affect our imports and exports?
It does, yeah. A weaker rupee can actually make Indian exports more competitive.
Oh, how so?
They become cheaper for buyers in other countries.
Oh, I see, but on the other hand...
But it also makes imports more expensive for India.
So there's a trade-off there.
Always a trade-off.
And that can mess with our trade balance. And potentially even lead to that imported inflation we were talking about earlier.
Exactly. It adds a whole other layer of complexity to the RBI's decision.
Wow, this repo rate cut, it's like a multi-dimensional puzzle.
It really is.
It has so many different moving parts.
Yeah, it touches everything.
From business investment to consumer spending, financial markets, exchange rates, global trade, it's all connected.
And that's why it's such a good topic for UPSC prep. It really tests your ability to think about all these different pieces of the puzzle.
To see the big picture.
Exactly, and to explain your analysis in a way that's clear and concise.
Okay, so this deep dive, it's definitely shed light on just how complicated all of this is.
Yeah, it's not simple.
But before we jump to any conclusions, let's take a step back and think about one final question.
Okay.
Given everything we've discussed, the global economy, India's growth targets, the need to control inflation, was this repo rate cut? Was it the right move for the RBI to make? I mean, that's the big question, right?
It is, yeah.
And there's not really a simple answer.
Not at all.
Which is why, this makes for such a great discussion. And even more importantly, it's probably going to show up on your UPSC exam. So this is where you got to use those critical thinking skills.
Absolutely.
It's not about being right or wrong.
No.
It's about analyzing the situation,
Right.
weighing those pros and cons, and then, making a strong argument.
Exactly.
So what do you think? Based on everything we've talked about,
Yeah.
did the RBI make the right call?
When you look at the big picture,
Yeah.
the government's really pushing for growth. Inflation seems to be easing up a bit.
Right?
And then there's all this global uncertainty to deal with.
Yeah, it's a lot.
It is. So I think this was a calculated risk.
Okay, a calculated risk.
Yeah, the RBI is trying to stimulate the economy, but they're also keeping a close eye on those potential inflationary pressures.
That's a great way to put it, a calculated risk.
Yeah.
It really highlights the fact that the RBI, they don't make decisions in the bubble.
Right.
You have to think about all these different factors, what's happening now, what might happen in the future.
Exactly, and they don't always have perfect information.
Yep.
So yeah, it's definitely a high-stakes situation.
Absolutely, and that's what makes this so relevant for your UPSC prep.
Oh, for sure.
Because the exam, it's all about understanding these complex economic dynamics, thinking critically about policy decisions,
Yeah.
and being able to explain your analysis really clearly.
That's the key.
So to all our listeners out there, all you future policymakers, we want to hear from you. What do you think about this repo rate cut? Was it the right move? Hit us up in the comments. Let's have a discussion.
And remember, this is just one piece of a much larger puzzle.
Right.
So stay informed, stay curious, and keep thinking critically.
Those analytical skills, they're going to take you far.
Absolutely. All part of that journey to becoming a policymaker.
And don't forget, hit that like button.
Yeah.
Subscribe to our channel for more deep dives like this.
We're here to help you break down these complex topics.
And hopefully make those exams a little bit less daunting.
Oh, for sure.
All the info we talked about today came from a recent article in the Indian Express.
Yeah, we'll put a link in the show notes so you can check it out.
Until next time, keep those brains buzzing, and best of luck with your UPSC journey.
Good luck.